Tax strategy is a very broad term. Most people, as far as how they view taxes and any strategy with it, kind of view that in current tax year. So a lot of people would primarily be talking to maybe their CPA, and they're trying to figure out how do they lower their taxable income or their income tax for the year. Many of those strategies have unintended consequences when it comes to later in life, because generally speaking, if you defer paying income tax, that tax gets paid somehow, sometime. An easy example would be traditional 401k or a pre-tax 401k contribution. If you're deferring tax liability in the format of a contribution to a 401k, you're deferring the income tax being calculated on that dollar. So if I put $1 in today and tax rates for me are 30%, and then I fast forward in time and I'm withdrawing money at age 65 and tax rates are 40%, that's not a very good equation. But a lot of people don't slow down to really think about that. There's a lot of other things, maybe with a business owner that's buying equipment and depreciating it. When you sell that equipment or that business later, you've got to pay all that depreciation back. The other aspect of a tax strategy might be, how do I eliminate or minimize taxes for the future? Conventionally, an easy example would be a Roth IRA, where we pay the tax on the dollar today, and when you go to use it, you're not having to pay tax on whatever that dollar is for whatever it's grown to. There are issues with that, in that most of our clients make too much money to traditionally contribute to a Roth. So we go beyond that to find other strategies that allow people to not have to pay taxes or have those dollars not show up on the IRS radar screen in the same way that others do. And it's all about how you balance, how am I saving taxes today? Do I even want to save taxes today if I know I'm going to have to pay them back later? There are examples where you would, but also, and I think more importantly, how do I make sure I've got the right amount of money that isn't going to be taxed whenever it is that I want to use it? And how do you balance those two things together? It's all about having everything connected and making sure that when I pull this lever or push this button, it doesn't create a negative impact for me at the point in time that I actually want to use my money.